Palisade Research has just published Palisade's top 3 uranium picks for 2017. Historically, junior uranium companies are where mining titans like Rick Rule and Robert Friedland have made much of their fortunes. For that reason, Palisade has just completed a detailed research piece identifying 3 companies poised to outperform in the upcoming uranium bull market. Visit palisaderadio.com and input your email to receive your free report. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today is Peter Spina. He's the president of goldseek.com. Peter, welcome back on the program.
Hi, Colin. It's great to be back.
You're coming to us from Prague today, and for anybody who doesn't know, you were actually one of the pioneers of the internet, or at least mining on the internet. GoldSeek was pretty much the first site, I believe, that was up, that was giving gold prices and also information about companies. Peter, a little bit of background on yourself for those who don't know.
Well, thank you for that introduction. The gold side, I was interested from an early age. My dad, as a teenager, got me interested in investing in the Jim Blanchard, who used to author the Gold Newsletter, which is now Brian Lundeen. He had a subscription to that. So with the web and internet coming around in the mid-90s, I started GoldSeek, which started off as a hobby and has grown into a substantial gold website today with about 250,000 monthly readers. So I started off as a gold investor, believing in precious metals as money, and also became interested in the mining stocks from an early age because of the opportunities. And back then, the opportunities were quite amazing at $250, $300 an ounce gold. But we fast forward with the gold price near $1,000, $1,100. There's quite a few opportunities again today. Actually, quite a few similarities from back at the bottom of that gold market cycle and what we're seeing today.
Well, let's talk about where we are today. Gold prices over the last couple weeks seem to be making a turn upwards. Over the last couple months, we had the gold stocks holding up relatively strong, but the price of gold kind of knocking down, and a little bit of concern in the mind of investors that gold stocks would catch up and actually start heading down. But it seems like we might be having a good start to 2017. What's your feeling, Peter?
It does. It's a really good indication, as has historically been shown, gold stocks lead the price. So it's a good sign that this is for real and that we are going to reverse these losses that we saw. Technically, the gold price has some really good support around 1,100 or so. There's a big downtrend resistance from the peak about 5 to 6 years ago, and that intersects around 1,275, 1,300. So technically, there might be some resistance there. But what I'm seeing right now is a growing, strengthening gold price where we have Wall Street back in the market. They're buying. They've been sellers of the gold. You can see in the gold ETF, they sold millions of ounces of gold from pretty much the time that Trump was elected in November till a couple weeks ago. So now with them buying, China's buying in a big way. There's kind of a rush for gold, and with the technical and just general traders out there, the market's in a really good position. I don't know if it's going to do a breakout in the next several weeks or it's later this year, but I think the gold price more likely in the coming months will break through this resistance, and then we could be really off to much higher U.S. dollar gold price. $1,400, $1,500 being really $1,475, $1,500 being the next upside after that.
Peter, when you started GoldSeek back in the early 90s, and since then you've seen quite a few cycles. You had that cycle leading up to the Bre-X scandal, which was pretty epic. 2002 to 2007 was a fantastic run in the gold stocks, and then we had a mini rally after the crash in '08 that lasted through to 2011. And you mentioned that there were some similarities today when gold's at $1,000, $1,100 an ounce, to the gold price back, to the gold stocks back when it was at $250 an ounce, which is pretty hard to imagine. But what it pointed out was just how cheap the gold stocks got. Now that we've had a rally for the last year and these gold stocks are not quite at the bottom, how are you feeling about the value present for investors coming in and buying?
Well, Bre-X came years before the bottom of after, the gold price, kind of bottomed years after that. And it shook the confidence and delayed a lot of investment into the gold market. So it kind of lagged for quite a while. And then when it did take off, it really shot these gold stocks higher. Not many gold stocks could survive that period. And like has happened the last several years, a lot of companies have had to consolidate, have merged. I would have liked to see more companies actually kind of washed out through this correction, but a lot of them have held on through dilutive financings and so on. And one has to be careful about those companies out there that have not much really behind them except good promotion. But the good companies, there have been a lot of companies that have been able to manage this downtrend, and their valuations have come off from their highs 80-90%. So, and then there has been some uptake in the last weeks, but overall, in the last year, there's been some really good returns. But I think if you look at the bigger trend here, we could be entering into 2, 3, 4, 5 year bull trend like we saw in the last cycles and since the mid 90s. And what's really interesting now is that we really didn't have we had some discoveries, not really big discoveries. And these big senior mining producers have gone through their reserves and resources. So we're in a real big need right now to replenish those from the seniors. So there's a big underinvestment and capital investment into the gold sector and silver sector. So exploration companies with some assets and good prospects, they're going to get a lot of interest in the coming cycle, and investors can participate in that by getting in the right companies.
Peter, Trump's ascension to the presidency has been a hot topic for the past couple of months. It's certainly shifted some capital. Trump's policies are going to differ quite a bit from Obama. He's talking about tax cuts, potentially tax rebates, maybe some industrial sort of initiatives in terms of building out infrastructure, which seems to have driven the industrial commodities. First of all, what's the sentiment for Trump over in Prague in Europe that you're sensing, and what do you think it's going to spell for the commodities moving forward?
Well, it's a very interesting year for Europe. We had Brexit last year, which is a pretty big event and is still unfolding. And the entire European Union, the euro, politically and economically is being challenged. And we have big elections in France, Italy, Netherlands, Germany coming up. If we get this national pride, these national populist movements, which has kind of had enough of these old regimes come up and into power, well, this European Union is going to fall apart, and the euro looks very vulnerable at that point. So for the coming year, at least until we have resolution and know how this plays out, the euro doesn't look like it's going to do so well. The dollar is kind of the good paper alternative, and it's giving a false sense of security because people are going into the US dollar because rates are going up and the euro is weak. Now, what are other alternatives? And China is looking like it has some issues, so the dollar looks quite strong, but that's still in the end the wrong thing to look at. Gold is the right measure, and I think as we saw from a pretty famous fund manager on Wall Street who sold all his gold on the night of the Trump election victory in November, came back, I think, a day or two ago and said, well, he's back in the gold market. There's no other currencies that look attractive out there. And I think that's really the conclusion that most are going to have to come to, is that the dollar is going to be devalued under Trump, most likely. There's too much debt. He is known as the king of debt. And he was asked before the elections, how does he manage debt? And his response was, well, I spend a lot, which is kind of these infrastructure projects we're talking about and other big, building up the military and so on. And then you go and renegotiate with the bond or debt holders and make them accept less. So maybe that's, what's happening right now. We're going to issue a lot of more debt. We're already 20 trillion as a nation at the current, level, and goes put some more out there and then devalue the value of that debt by devaluing the US dollar. So for him, I think there's some optimism about American business, and that's a different topic. But as far as the value of the U.S. dollar goes, I think it's their policy and their interest to devalue it, because a strong dollar is not going to help manufacturing. It's not going to help bring jobs back. It's not going to make managing the debt easy. So that makes gold a very interesting play right here. And that might be also reflected with inflation coming back.
On the topic of currencies, devaluation, debt levels, talk to us a little bit about capital controls.
Well, this is an issue that's growing globally, and it's something that we'll see what happens in the U.S. when you have India was probably the best example recently, where they banned the two notes, the $8, I think it was $8 and $15 equivalent value in US dollar equivalent cash notes, and suddenly 80 or something, 90, 86% of the outstanding currency became pretty much illegal to own. We're talking about cashless societies and more controls over central authorities trying to have control over your assets and how you move your money around, and they're looking for ways to tax it. And that's why Bitcoin is becoming more and more interesting. And you see the demand from China, where they have capital controls, which restricts how much money a person can take out of the country at a given time. You could wake up and like we saw in the early 1930s, there's a confiscation order on gold. I think with Trump, that threat in the U.S. is a bit diminished right now because there's not a lot of ownership of gold, and Trump seems to be actually in favor of gold. We'll see how that pans out as well. But capital controls is something that, as an American, you need to start, or anyone in any country, I think it's a risk that rely all of your net worth and rely all on one location. So, it's like diversifying your portfolio. You should diversify your assets and different products and different locations. And it's a more detailed process, but it's good to have options. And capital controls is something I think becomes more of a tool as we go forward, and we have these imbalances and this rise of nationalism. That's when I think they'll become more and more employed.
Well, Peter, you discussed the scramble by the majors to replace ounces a couple minutes ago, and this is a topic that the CEO of Gold Corp touched on at the Vancouver conference a couple weeks back. Actions certainly speak louder than words, and sure enough, Gold Corp and many majors are investing in junior companies that have either substantial resources or are moving into production, and this must be driving a bit of your investment and speculation ideas in terms of where you're allocating your money and suggesting for other people to maybe look. Do you want to talk about a couple ideas or specific companies that you like right now?
Sure. The $100 million investment announcement by Gold Corp was very positive. It shows a good step and a smart move by them, because the industry is going to have to put a lot more into that to try to replenish the reserves. There's all sorts of different ways to invest in the gold market. My favorite way has been into junior companies. But I have invested and do have investments in some bigger projects, and I have visited, say, the KSM project up in northern BC by Seabridge Gold. That has a huge gold and copper asset that will be developed at some point and is very valuable, with tens of millions of ounces of gold and billions and billions of pounds of copper. Those are some huge ones out there, but there's not too many of those. Exeter has another one down in Chile. Those are great investments. I also myself like the leverage of junior gold producers. One of them recently that I've become an investor in have been accumulating a position in has been Northern Vertex Mining. I met with Ken Berry last fall. Was very interested in the prospects of a near-term production story in the United States, especially with the victory of Trump. I believe mining in the United States has become a lot more attractive. There were threats of new mining laws under the Clinton Democrats. Obama had some things on the books. So all of a sudden, mining in the United States has become a lot more interesting. And if the U.S. dollars become eventually less valuable, then that'll also help the U.S. production story out. So Northern Vertex is starting up later this year, commercial production. The company has de-risked the project. It's a great little mine. It's not that little, 42,000 ounces a year, at an all-in sustaining cost of $662 an ounce. Now, there's not many gold mines that I've come across that have that sort of level of cost structure and return on your capital. So they're making almost half their money back, their return on their capital, 50% in 1 year. The capex is low, $33 million. Most of it's been financed with Sprott lending and debt conversion recently. They raised some money in the market. They're also trying to expand the size of deposit. It's a great story. So that's a kind of a company that in this market with the gold price looking to go higher, I can become a big investor in. But then in a situation that the gold price doesn't take off, I have the downside cushion. If the gold price goes below $1,000 an ounce, there's not many gold mines that can make money, and this one looks pretty safe at even that sort of situation. So, that's near-term cash flow. That's a great company. And then there's other silver and gold deals out there. I probably have 20, 30, probably more, maybe even more than 30 investments into junior gold stocks, silver companies. So I kind of can talk about some more at some other point, but I'd say those are the kind of companies right now are worth looking at. And of course, always, bullion is an important part of an investor portfolio. I've been buying physical silver here. It's cheap. And silver stocks and gold stocks, junior stocks are overall all pretty cheap right now.
Yeah, we had Ken Berry on the program a couple months ago and talk about a stand-up guy, especially in comparison to many of the people in the junior space. Ken's a very trustworthy and great person who's executed on Northern Vertex to a T. Peter, let's leave it with a question for you. You've been around for a couple cycles here. What kind of pitfalls should investors be looking out for? And then also, obviously, these stocks are very volatile, as witnessed over the last year. We had a huge run up and then quite a sell-off. So how do you deal with that kind of volatility?
Well, it's good to always have cash because you never know when the next opportunity comes. You always feel like when you're buying that you're buying at a good price and then a better opportunity comes around. So always having cash to buy these pullbacks is great. And don't be afraid when you do have a big run in these markets to take some off the table as well. Taking profits can be very difficult, and it's always great to lock some of that in. This sector has a lot of choices. I think last year, coming from the bottom of the gold market, you could have almost picked any company and done well with it. But I think this year going forward, there'll be somewhat of a repeat, but you have to be more selective. So I always talk about management. Ken Berry, for example, yes, I can invest in this Northern Vertex mining because he is the kind of person that knows how to run a company and is competent. There is a lack of, I think, qualifications in the mining industry in the junior side. Finding the right mix of people, it's hard. So when you do find that, I think it's important to make sure you're investing in the people first, and then the projects and everything else after. And it's a hard, difficult business to be in. But if you do select the right companies, there are some big rewards out there.
Peter, thank you so much for coming back on the program. Peter Spina is with goldseek.com and silverseek.com. Hopefully we can get you back here on the program in the coming months.
Sounds great, Colin. My pleasure.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?